Out to Trade Masters presented by Tackle Train. This is Coach Matt. I got two amazing coaches with me as well to talk a little bit about what's on their mind following kind of the midweek data drop here today. I mean, we got trade talks, we got earnings, we got the. Did we have the central bank today? Did that actually occur today?
For a minute
Yes,
or two.
I believe it did occur a little bit here today. All of a sudden, volatility spiked in the market today, and I'm just sitting there looking at the chart. And I'm like, oh yeah, it is Fed Day. Like it has not been a big part of the conversation this week, I will say. But what was interesting out of Fed Day, and by the way, as you're coming into Trade Masters here today, if you love Trade Masters, you love the picks, you love tackle trading, you know we're going to bring the lightning and the thunder here today, make sure to give it a nice little like and share. Participate in the comment section as we go through the picks. And what Trade Masters is, everybody, is we talk about every single Friday, we put together the Traders Report. It is our favorite technical setups for going into next week. And so on Wednesdays, we like to do a little bit of a midweek review. And if you love Trade Masters, I promise you, you're going to equally love two things: the Tackle Trading newsletter and the Traders Report that we put out to our pro members every single Friday. So if you want to be a part of that amazing community where you get all the education, all the application that your heart desires, hit that link in the description below, sign up for a free trial membership of Tackle Trading, and come and hang out with us every single day as we talk shop on trading. With that said, guys, it was an interesting day here today. And before we get too deep into the woods on the potential picks here, we had a couple major earnings reports, and I just want to take a moment to kind of talk about the big three reports here today. And I kind of look at these three big reports. You got Meta, you got Microsoft, and you got Google. And Frankie, you remember the old Clint Eastwood movie, The Good, Bad, and the Ugly?
Oh yeah,
All right, I
that's what
got
we got here.
well, a little bit different. I went the good, the bad, and the indifferent is kind of where I'm at
Oh,
here on
okay.
these three. So, do you want to start, Frankie, with the good or the bad or the indifferent?
I want to start with the good.
The
I want to start
good.
with the
Well,
good.
I'll tell you right, you don't have to go too far from good because it starts with Google. Google was absolutely lights out. Great report coming out of Google. And you don't see the price response on the daily chart. You got to go into the intraday side of the equation. And the market did not hesitate in any capacity. Google's up 20 points on the overnight session. The market maker move on Google was 17 points. We're above market maker move, and it doesn't seem like it wants to slow down as they start getting into the conference call. Now, Google, from an earnings perspective, they yeah, you could accept that they were just good, but Frankie, they came in with a 33% beat against EPS. Revenue was up 16% year over year. They raised the CapEx outlook from 75 to 85 billion up to a whopping 91 to 93 billion.
Yeah, that's
That
what we like.
massive increase in CapEx spend is why we're talking about Google
Yep.
up, 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 up. It's the growth driver. It's the heartbeat, the gasoline of the AI narrative is CapEx spend. And we saw CapEx spend go up 9% above expectation on Google. They weren't done. They had a lot of secondary things here, but at the end of the day, beat, and an increase in guidance, which I do see through the CapEx spend. We call that a hat trick at tackle trading. When you officially beat the EPS, you beat the revenue, and you have that guidance increase as well. That is an awesome report. Google currently pricing in at 292. Expect a gap out situation tomorrow, but Google certainly the good. Not
That's
a
nice.
flaw in their report so far. Now, Frankie, the bad, I think you got to go with Meta. I mean, Meta's price response, the market maker move was a whopping like 47, 48 points here today. And it is officially beating that market maker move as you're underneath that $700 level. On that gap, the current price is 750, guys. You're going to start tomorrow underneath $700 here. This is why we're not talking about the at NASDAQ and the ES ripping tonight, Meta was that problem child. Now, was it the raw numbers? Was it revenue? Was it guidance? Where were the issues here? Is there a fundamental flaw in the company, or is this like a one-time situation that we see? When you go to the numbers, Meta comes in with a 9.6% beat, slightly above market expectation. Revenue came in 26% year over year, which is perfectly fine. Guidance actually saw an increase in revenue guidance, although very, very, very slight. Kind of trickeration, but still an increase is an increase. So, not necessarily raw numbers here. So, where's the flaw? The flaw is a $16 billion one time charge to the big, beautiful bill. And so, as the big, beautiful bill, the one that Trump's budget plan that got passed earlier this year, they have a $16 billion charge on that. And that brings their $7.25 EPS this quarter, which is outstanding, down to $1.05, which is not. And so they do have that one-time charge that's impacting it. And in comparison to Google, where they have an 8.9% increase in CapEx spend, and you just kind of, I would say, flat on CapEx on Meta, there's just enough to, there's nothing to offset that 16 billion charge. That's a big time charge, but it's also a one-time charge. And so keep an eye on that. Let's see how it performs around the $700 level. And I just said indifferent for Microsoft, Frankie, because I didn't want to say the good, bad, and the ugly. I think Meta was ugly, but I certainly don't believe Microsoft was bad. So I just said indifferent, more so because of the price response. We're seeing a little bit of selling as we are getting into the conference call, but when the release of the raw numbers on Microsoft, let me get to the raw numbers here. I did post these on my Twitter account as well. If you want to follow me, Matt Justice 13 on X. Microsoft came in with an 11% beat against expectation. Revenue is 18% year over year. Microsoft doesn't really move on those numbers. What it moves on is Azure cloud growth, which came in at 40%, easily above expectation here. So we are seeing a little bit of pullback situation on Microsoft as well. Microsoft can certainly handle a little bit of downward drift here, Frankie.
Oh
I don't
yeah.
think Microsoft would be too shabby around the 230, even down here in pullback analysis. So we're going to see some pullbacks in Microsoft. We're going to see some Momo in Google, and we're going to see a nasty gap in Meta tomorrow. That is your news today that the market's going to be talking about tomorrow. With that said, I just want to take a moment just to talk a little bit about the earnings landscape here, because this was a major, major part of this week. We have Apple, we have Amazon tomorrow night. We will obviously be talking about these in great detail in the Traders Lounge at Tackle Trading tomorrow morning, that we do with our community every single day. And with that said, I want to welcome in our amazing coaches for listening to me right there. Just rapid fire those earnings
Love
analysis.
it.
Frank,
Yeah,
Bobby,
love it.
let me go to Bobby first. Bobby, what's your thoughts on the earnings out of Microsoft, Google, and Meta? Is there anyone that you kind of like, ooh, I want to take a look at that one tomorrow. I want to take a look at that. Or is there anyone that you want to put on the radar, or all of these kind of like, I just want to wait and see a little bit?
Yeah, I mean, I think mostly it's more of a wait and see, just to see what the price action is, at the
Mhm.
open, then maybe like 30 minutes after the open, just to see, if it's a, buy and sell off, just kind of just get a feel there. And, they're always going to be on my radar. I always track these Mag 7. So I guess we'll just see what happens tomorrow morning when the market opens.
Yeah. Frankie.
I'm just glad they're done. That means I'm that much closer to earnings season being done. That's my least favorite stretch of the quarter, every single quarter.
The
So
big week.
getting these three behind us means I got just a couple more really, really rough days. Right, next week's still
Yeah.
pretty big, but not the same level of big. So, of course, like Bobby said, they're Mag 7 names. You always track them. But I'm just mostly glad that they're over, to be honest with you.
Secondary patterns, I think, are going to play on Microsoft and Google.
Microsoft pull back to the breakout channel,
And
right?
Google
Momo
clean
patterns
up
on
that
Google,
momentum
and
a little bit. Both of them
Meta
looking
might
pretty
be
good.
a see you next quarter look, right?
Meta,
It's going to need a
Meta's
cleanup
going
from
to
what it
need a
sounds like.
reversal. It's going to need a reversal after that type of gap situation. But again, I kind of agree with Bobby. We've seen the initial reactions. We haven't seen the reactions necessarily to the conference calls yet.
Yeah,
And those
yeah, that
on
can
these big
change, right?
stocks, those are important.
They're
Like
very important.
you get Tesla's numbers and everybody waits to hear from Elon type
Yeah,
thing.
Oh,
And
yeah.
so let's hear from these CEOs that lead these great companies as well. But we know the score, we know the landscape, and with that said, let's talk about those picks today. Frankie, you're the
Very nice.
resident veteran here. You get a pick. Who goes first?
Well, listen, I said I was going to wear my camouflage hat for Halloween so I could be the Duck Dynasty guy. And
I wore my
Bobby
dolphin hat for
and
Halloween.
Bobby said, "Yeah, I'll wear a costume too," and he didn't. So I'll go first.
Bobby dressed up as Jim from The Office.
Just about myself.
Yeah.
So there you go. I really put a lot of work into this, grabbing my camo hat. But yeah, I'll go first. And let's go breakout round first. We got a couple breakouts, couple pullbacks.
Breakout.
And I'm going to go with Wells Fargo. I have a few names, and as always, when we're done here, I will throw my Wednesday scan in the Tackle Trading New Traders channel on Discord for anybody who wants it. I like the story here on Wells Fargo. This is one that I mean, it's close enough that it could, trigger tomorrow, but I don't think it's going to scenarios. But with that said, this is a really clean post-earnings developing situation. So this most recent break of resistance happened on the back of earnings, right? And they definitely stood out as far as the financial space is concerned. But they're Wells Fargo.
I thought they were one of the 2-3 better banks that reported that week.
Yeah, they did stand out.
Morgan
I thought
Stanley, Citi stood out, but Wells Fargo was right
Wells
there.
Fargo, and we all kind of laugh at Wells Fargo sometimes, but a chart's a chart, right? And this is
all
pretty
the time,
good,
but yes,
pretty good look. Finance has been a relatively cold sector, largely on the back of insurance, regional banks, not so much the big banks, but the big banks have kind of got caught up in chop during that little stretch while the rest of the sector kind of worked itself out. It hasn't done anything wrong, just hasn't really been able to get rocking and rolling, but it has been able to subtly put in that higher low, right? Have that first pullback after that earnings, pulled back into the 9 EMA, created a higher low, now worked up into resistance. You got that 9 rising up. Ideally, that 9 continues to rise up, and ultimately we kind of springboard through that resistance level off of that 9 EMA. But the breakout channel at approximately 87.50, and man, it is clean because it gets anywhere near like 87.47. I think that's the actual high water mark, and it's done it like 4 or 5 times, within like 10
I don't
cents.
think it's too debatable here.
Yeah, like it's, it keeps getting into that. It's like, nope, not ready. Nope, not ready. Nope, not ready. Nope, not ready. And maybe it never will be, but it also might be relatively soon, right? And these being all-time highs and us coming out of a pretty good lengthy range ahead of this. I mean, Wells Fargo was actually pretty sideways for.
Yeah, they broke out on the earnings, but
that breakout on the earnings was like out of a long-term sideways range, right? These guys have basically been at the same price point for most of the last half year or thereabouts, which kind of tells me that there's plenty of room left to run on these characters. This is very early in the breakout saga. So it's kind of a breakout of a breakout, if you will. So nothing too tricky here. I think we know what we need to see from an entry perspective. We got to get above 87.47. I'm going to call it 87.50 because I'm a pretty simple dude. We got to get above that level. I don't think you're interested in a pullback here. I don't think you're interested in a front run. Everybody can decide that for themselves, but I'm certainly not interested in
Can I
that.
ask you a question on that entry?
Yeah.
Above 87.47, 87.50. Do you need to see a close with confirmation here, or do you think the quality of the level and the quality of the overall pattern is good enough just to say let's giddy up above that level?
That's a good question. I think it's a 2-part answer. If we continue to hold the structure of the 9, that 9 we stay above the 9, that leads us into the breakout, then I think getting above it is fine. If we give up the 9 and say come back down to that support level and go into more real neutrality, then I would want to see a close, if that makes sense. So
because support's kind of pressing and you're pinching against that level, you want to be aggressive above it. But if you give up the pinch,
if you give up the pinch, you're basically consolidation. Yeah, that's how I would view it. So as it is right now, I'd have no problem coming in on whatever your rule above, resistance is. If it does give that up, we're in more real consolidation. I think at that point in time, I would be a little more, demanding and say, okay, you close above 87.50.
Are you thinking pure swing trade here?
Yeah, I'm thinking a long swing trade
position.
Yeah, a long swing trade, a short position trade, because I do believe coming out of that range, I think you can legitimately target this into that $95 level. that just probably is more of a month-long conversation than it is a
7
week-long
day.
conversation, right? And so it's kind of one of those scenarios where,
But I also think it goes to how aggressive you want with the stop loss, Frankie.
well,
Yeah.
exactly, yeah. If you just wanted to, if you got the close above 8750, put your stop loss underneath that candle's low and wanted to kind of pop a call on it and trade that from a swing perspective, a pure swing, I think you could make that play as well. But I think for me, I'm looking at targeting this into $95 dollar range personally, which I just got to be realistic. I hope it happens quickly,
Yeah.
but I can't really expect it to happen quickly. Right. Being Wells Fargo, you can kind of go whatever route you want to go. Shares will play, pop a call. You can do a bull call, right? There's going to be plenty of ways that you can play this directionally, if you prefer shares or options. I do think you got a break. I think it's up to you to decide if you need to close or just a breach of that level. I'm a breach as long as the 9 is below us and kind of springs us here.
Stay structured in pattern. You can be aggressive. You give up a little bit of the structure of the pattern. You got to wait for confirmation to clean it up.
Exactly. Because the lesson I learned a long time ago is these things break on their time, not mine.
If patterns are consistent and levels are clean, you can be aggressive with that. Like you can be aggressive with your order entry. You can be aggressive with strategy. When levels are slightly clean and pattern gives up structure, I think you want to see confirmation because that cleans up everything.
Yep.
And so I like it, Frankie. Anything else to add on Wells Fargo here?
Nope. Don't do it tomorrow. Do it
strategy
Friday.
wise. What do you think is from a strategic perspective?
I would probably look at a bull call simply because I usually do. But being Wells Fargo, I'd have no beef if you popped just a long call. I just generally don't like popping calls.
Listen, you're never going to get criticized by buying a good call option and selling a bad call.
I mean, that's just where my head is. I just can't ever get. I
don't think anybody's going to criticize you for trying to be a little bit more risk adverse in the market right now.
Yeah, that's kind of where
I don't think that's a bad thing at all. Bobby, you got Wells Fargo to beat. How are you going to beat it here?
Yeah, that was a great pick by Frank. I think Wells Fargo look good here. So what I'm going to do is I'm actually going to go to the energy sector and do a tackle 25, Slumber J.
You have my vote already.
Cheater, a tackle 25 versus Wells Fargo. I just lost. I just lost round 1.
Yeah, my vote.
Yeah. I've been following the tackle 25 for years, and that list that Matt puts out is wonderful. And every year he keeps adding different gems on that list that I get to track and I think Slumber J's been on there for a while, but this is one that I've always been trying to add on to the list.
But I think it's been on for 2 years now. But it's been
2 years,
a couple times.
But, yeah, and I just been following these guys, trying to find a good entry. I know they caught some news back in April. I don't know if it was. I know they rebranded. I don't know if that was some of that news back in April was for that or some other type of news, but I just think it's been off a lot of people's radar just because that big candle there, and it's been sitting sideways. It hasn't done anything disturbing like it has in the past, but it's been constructive. This reversal I think it's beautiful here, and I think there's a lot of different plays that you can do on this. You can either like you said, it's a good fundamental stock, or if someone just wants to do a swing trade, I think it's in a good spot to where you can do that as well. So for me,
see it as like dealer's choice on the strategic perspective.
Correct. Yeah.
And I would agree with that, because a long-term investor trying to pick up a good old-fashioned energy stock that wants to do covered calls, Slumber J is in a good position for that.
Good reversal, right?
But on the directional side, you're kind of like, you get above that 50-period moving average on the weekly chart, you got some open air here.
You got some room to run.
Yeah. And another thing that another thing too, is if you see here that little green dot at the bottom, they do pay a dividend. So not only can you want to go long term and sell some calls, you also get a dividend. So you're pretty much double dipping. I know Frank likes that a lot. So and so Slumber J, I think right here, as you said, you get over that monthly 50 moving average. I think you have a lot of upside, and you do have a few long-term moving averages overhead that you will have to contest with, but I still think that you still have some room to to Boyd with this one to, still make some money
Even that
there.
20 monthly is plenty of
Yeah,
distance.
still have a good window there. Yeah, for sure.
It's a,
So
it's
even
a
if
good
you're
window.
just swing trading it, that's a good window.
It's a good
Yeah.
window. Yeah.
No, absolutely. So for me, what I was thinking on this one is more of a position trade, kind of, swing to a long-term position. As I said, I do want to own this stock. I do like Schlumberger. So this is something that I do want to hold in my portfolio for a long time. So, you give me a confirmation over that 50 moving average. I think, I'll do a nice little position trade, whether that's with options or, just to
So
buy some
your
shares.
intention here is to acquire shares of Schlumberger due to the reversal with the anticipation that you're going to use this as a cash flow vehicle, writing covered calls, capturing dividend, and starting the what I would call the compounding phase of a long-term investor.
Absolutely. Yeah, I think,
I love that game plan.
Yeah, I do
love
too.
that game plan.
there's
I think
nothing
a
wrong
lot
with
of
it.
times we get so intoxicated over the potential of short-term returns. The turtle and the hare all the time. The turtle wins that race. Compounding, it's slow at first, but as you do it more and more and more, that snowball gets bigger and bigger and bigger. And Schlumberger, I'm sorry, it's a tackle 25 stock. I love the stock. So Schlumberger is a good pick for that, Bobby.
Yeah, no, absolutely. And if someone can't, so, I mean, there's a lot of people out there that probably can't, buy and do some cash flow trades like whether selling naked puts or cover calls. So I mean, if someone was to swing trade, you can obviously buy shares on this one. Or you can go in the option chain and you could do a quick little. I think I was pricing out at December 19th, 35 and a half, 42 and a half for. I think I was getting $1.19 for that. So a little cheap option play as well.
Yeah, it's kind of in one of those positions where you got a good reversal on the long term. It's a good recovery situation on the short term. And a lot of different traders are probably looking at Schlumberger
I
right
would
now.
imagine so.
Like swing traders above resistance are going to look to play that pocket with call options. Investors are going to be looking to pick it up due to the reversal and start that process. Exactly what you were talking about on, selling covered calls, because you can look at a company like Schlumberger, you could go out just 23 days from here, sell a out of the money call option and bring in a good 3% on margin on cash
Absolutely.
flow. That's doing too shabby. You capture that 1% dividend quarterly, compound all of that. 3 years later, you're compounding a heck of a lot more than that dollar.
Yeah,
So
absolutely.
compounding, like I kind of feel like people really miss the mark on compounding and covered calls in general. They always when they're 50 years old and they've been trading for 20 years, they understand the value of it, right? Because they're like, I really wish I would have started doing that when I was younger. But when you're younger, obviously people have a little bit of a I'm going to live forever mentality. And I might be speaking about myself when I was but they have a I'm going to live forever. And so they don't think about the long term until they get to the long term. They're like, oh, now what do I do? Well, you should have started compounding on Schlumberger 10, 15 years ago. I love the pick. I know a lot of times we talk about those short term trades here. I love this pick here on Schlumberger, Bobby. All right, team. Which one do you go with? Do you go with the Wells Fargo breakout position trade, or do you go with the Schlumberger reversal equity covered call play? Which one? Frankie, you go first. Do you still maintain your Wells Fargo?
Of course I don't. I'm not choosing Wells Fargo over SLB. Like this was stacked from the beginning, right?
I didn't like your chance.
I mean, they're two very different things
Like,
in
don't get
very
me wrong,
different
I do
spots,
like your
but
trade.
yeah, I do too. But if
I
I'm
do like your
picking
trade,
one,
but
I would if I were
you
picking
give me an
one,
all-time high break on Wells Fargo versus a long-term reversal on Schlumberger with the cash flow kicker.
yeah, I mean, it's part of it. It's the names, right? The bias comes in, and like SLB,
Oh yeah.
not a particularly huge fan of Wells Fargo. If Wells Fargo was Lamb Research, I might not be so easily swayed, right?
Yeah,
But
100%.
it's a pure trading name in Wells Fargo to me. That's what
Well,
they are.
I don't want to come across as negative towards that trade. That trade is a clean swing trade.
No, but it's a trade. Right. It's a trade.
That's what it is. It's a trade. It's a trade.
Bobby's a cheater. He hangs out with Coach Mark before we
Bobby,
get together.
Like
Like,
I
how
said
can I
last week, I'm
cheat?
trying to
Listen,
impress Mark.
when Bobby is selling a naked put against trend analysis on Bitcoin, Mark's influence is pure. Until then, we still have him.
He's learning his cheating ways, not his insane ways.
He's our Bobby. All right, team. Where do you guys prefer? I see a lot Schlumberger, a couple for the Wells Fargo. Yeah, I think that's kind of where all of our heads are. Schlumberger, this reversal cash flow cover call long term. But again, Wells Fargo, good little trade setup there, Frankie. Don't mind it at all. Don't mind it at all.
I'm good with it.
By the way, we're all winners because you guys gave great analysis, and that's true. That's true.
Yep.
Just wanted to patch you.
Yeah, there we go. There we go.
If Mark was here, I would not have paid that compliment. It would have been a different thing.
Fair enough.
Round two here. I know what you guys are going to pick. Frank, you went first in round one. We're going to go to Bobby first in round two here. Bobby, step up to plate. We're doing a snake draft. You're up.
Yeah. So this one here, I'm going to go to Ford F. That's my next pick. I've been eyeing this one since, last week. I know they had earnings, and, with this earnings pop, I always, a lot of these earnings, what I like to do is I like to throw these on a watch list, especially, like when they had their earnings, they had a big green candle. I'd like to see what the secondary pattern is. And a lot of times you get patterns like this, these pullbacks into the 5 MA, or you get a deeper one back into the 9, or even deeper to, the 20. So I like to kind of, because when you're working with Frank, he always taught me, you try to, prep the next steps forward. So, I've been watching Ford, and this development into the 5 moving average has been, right down my alley, and something that I've been, doing for a long time. I don't know if you have that moving. There you go.
Yeah, I just had to get it on there.
So like I said, yeah, I like to track a lot of these 5. Sometimes I'll take these, sometimes I'll just wait till the 9. But like I mentioned yesterday in the step channel, I would have loved one more candle into the 9 just so I could get a better risk reward.
Relatively equal, we usually do.
But you can't be too picky. So I always was, I'm always like, do what the stock does, like Frank always says. So this one is just it's a cheaper one. So a lot of times, on these cheap stocks, it's hard to do options on them. Sometimes I think Ford, you can do options, but something like this, you can just buy shares, like kind of like how I was going to do with Schlumberger. You can buy 100 shares, sell some calls. I don't think their IV is very low, so I don't know what the premiums look like. But
yeah, the IV is around 35 right now on it's not bad for the covered call on Ford. Like, not at all. You just don't have a lot of choices.
Yeah.
You can sell the 13.5, or you can sell the 14. Like that's your choices here. And so it's on these low dollar stocks, like a $30 stock like Schlumberger is like perfect for cover calls because you got a lot of expiration dates, a lot of choices, whatnot. You are limited a little bit on a company like Ford. By the way, Ford was a former Tackle 25 stock, got beat up by General Motors, and General Motors took them over a few years ago. But it used to be a high quality cover call. It became a little bit more difficult. But it's still doable. You just have to be a little bit more selective on your timing.
Yeah, true. So it's just like I was mentioning, you could do like this. For me, it would be just shares. I would, you could go out and play some long calls, but I'm not a big long call fan. You could buy a long call and turn it into a bull put if you really wanted to. But for me, I think buying shares and, eventually, turning it into a longer term position eventually would be, how I would do it. So, for me on the entry on this one, I would go, my entry would be over today's candle. And then I would definitely put my stop below yesterday's. Yep. So then gives you the 9.
I would Frank taught you like
we like what we like.
No, for sure, yeah.
Well, that's why I love communities, because we all get to know each other and can kind of finish each other's sentences.
Yeah, you kind of know you kind of know what people like.
Yeah. But no, I would like, my first scale would be, right at that pivot at 1397. From there, once you got there, I'd take, either half position, maybe a quarter position off. I guess it's a preference based on the person. And that would be my, trigger to, manage my stop loss, move that up from there, and just follow that 9 moving average, work it into my T2 would probably be, I would probably work it into the 15, and that would be where my T2 would
15
be.
made sense to me. It's got some resistance level there on longer time frames. Got quite a bit of resistance there, honestly. Pivots here, shifty. Like it's not like clean at 15, but this pivot is clean at 15. So
Correct.
Yeah.
it kind of feels like it wants to walk up the stairs a little bit. So you got to structure a little bit of a swing to position trade here on Ford that you also are thinking about adding shares longer term to start embracing cash flow there as well. And yes, thank you so much for the reminder. If you love Trade Masters, love the conversation, make sure to give us a nice little like and share it with somebody else. Help us spread the good word of tackle trading out there and to the listeners and viewers of elsewhere too. Love the pick here, Bobby. Pure technical pick. And honestly, when it comes to secondary patterns, that's something that I think people have to understand what that means,
Yeah.
right? After an initial move, it's how we describe the next pattern. Like you were talking about, Frankie had taught you how to think about forward thinking, right? What
Yep.
you need to see, what not the current move, but where's it going that next move. Well, we all know the earnings saga was a really, really good saga. What do you need to see to process that trade? Because we're not going to chase that big bar on Ford. That's just kind of not how we're programmed at tackle trading
Yeah,
to chase.
we
We don't
wouldn't.
like carrying bags of others. We like to wait for the proper setup, and that's what that next pattern is. And you never know what the development is. Is it high inside, high base, or is it, low inside flag? You don't know what that is on a power candle like Ford. You're very open-minded to the development. And as you can see here, you don't get a pick. I would rather have it at the 9 EMA too. But if you're going to get a pivot at the 5 EMA and it's on your watch list, you better be ready to act.
Yeah, absolutely. You always, like Frank said last night in the coaches show, I don't think he could have said it any better. It's, you always want to plan your trade. So even before you get into it, you always want to know what your next move is going to be. So if you get in, what are you
Love
going
that.
to do next?
Love
And
that. Great advice.
what you should already know that before you get into the trade. So, I've been following that rule ever since me and him been working together.
All righty, Frankie.
It's a good look. It's a good
Last
look.
pick
I
here,
like it.
buddy. How you gonna beat Ford?
Well, listen, the way you beat Ford is you find a similar pullback on a stock that costs like 300 times more. That's a surefire way to win. But I'm going to go with GD, General Dynamics here. And I don't mind Ford, and I think you could even look at maybe doing a married put on Ford as well, if you wanted to do so. But GD kind of caught my eye for a couple reasons, Maddie. I mean, last week, and correct me if I'm wrong or if your read was different than mine, but last week, I think the theme that came out of last week's earnings, and granted, not the same important overall slate as this week's, but was positivity in those aerospace and defense companies, including GD. But we saw it over and over again.
Two of the aerospace that made the bull quick hits in the earnings write up in the newsletter. Do I have the newsletter up? I do have the newsletter up because I'm a good tackle trading member. I always have the
Always have
newsletter
it up. Good man.
So when you're looking at GE Aerospace, RTX, like, yeah, there was a couple on the bull hit list last week. Honestly, Frankie, I could have put 4 of them on there. Like there was the knock list was great. Lockheed Martin was volatile, but from an earnings perspective, they were pretty decent. I would say in general, out of any area of the market last week, in the aerospace and defense industry was probably the best one of the
I
bunch.
mean, it sure felt like that too to me. And so I think all of them there, I was really on the fence of GD versus GE, and I went with GD so we'd have pullback versus pullback. But if you prefer,
I do like the breakout in GE though.
I do too. I do too. So if someone were to prefer, say, I can cheat too, Bobby. If somebody were to prefer an E to a D on their G's, I would have no beef with that all-time high time to buy type
There's
of
a lot
deal.
of generals that are cooking right now.
There are some generals that are cooking. What I kind of like about GD specifically is kind of the ease. I I like to do a lot of thinking ahead, but when it kind of comes time to, okay, stock, you got to decide, like it's now or never. If it's not now, it's you're something else, and I'll reevaluate completely, right? I think General Dynamics is in one of those spots, right? You had the pop on earnings. Now you've kind of pulled back into the 20, just a little bit below that old resistance level, but today's high is kind of right at that same old resistance level that they broke out of on earnings. So any follow through kind of gets you back on the right side and helps alleviate any, maybe this was a fake out conversation, right? Because I don't think you're getting involved unless you take out today's high at the very, very least here. And so I kind of know it's time. I would love an inside bar tomorrow. So I hope, everyone who knows me, I always ask for another inside bar. But it really needs to hold this level, and it needs to break through these highs. And if it doesn't, I just kick it to the curb. And
you're talking about the high of the day,
the high of today. And you could, if you wanted to be a little more conservative, you could say the highs from October, the early part of October.
Yeah,
I think it's kind of lining up. So I would call it the same range more than anything, but you're kind of splitting hairs there. I would say.
I think you got kind of a go or don't set up here.
That's how I'm looking at it. Pure go or don't. Over the high, under the low for the stop loss. If it doesn't trigger tomorrow, if it doesn't go below today's low, then it's still viable going into Friday, right? And that's what I would really like to see. I would like to see that inside tomorrow bar where tomorrow's high isn't higher than today's, and tomorrow's low isn't lower than today's.
Doji where the opening and the closing price are identical. Frank's
not
happy yet. Like he needs the pure doji.
It does so much for the intraday cleanliness. Like when you get these pullbacks, you talk about it a lot of times in the context of the ES, during the lounge, but it's true on everything. When we get into these pullbacks, you give up stuff on the day intraday time frame, and you want to get traders realigned with one another again, right? And that one extra day of consolidation, those back-to-back inside bars where price doesn't do anything really for 2 days, it does such wonders for those intraday charts. But they will get rolling when they're ready to roll here, right? I think this is a pretty solid, pretty little easy trade. In over the high, go or don't, stop loss under the low. You give up the 20 and today's low. Like long term, it's still great, but now you've got a lot of stuff to work through, and I'm not interested in that.
I'll tell you, I'll do one better on that one. You give up this 20 period moving average, I'm going to be talking reversal. Because that would be slowing momentum, head and shoulders. That would be kind of the very beginning of the midpoint head and shoulders formation. I just don't think it would be a good look. I think it's an excellent look on a pivot here. You give up that, but isn't that the epicenter of a go or don't?
That's the ease of it, right?
That's exactly kind of what you want. Is you stay above and you have a quality pattern with the quality edge. You go under, you want no part of it. Like you want to be stuck on that, going against that kind of the history over here. So I like the setup here, Frankie. I'd really like go or don't setups, because in the depth of the retracement, there's always going to be another level you track. Right.
There's always another
until it's at the ultimate retracement. You're like, nope, that's no longer bullish ever again.
Yes.
Here, this isn't a depth of the retracement. This is a breakout snapback. And so if it doesn't hold, you're talking about something differently.
Yep. Exactly.
And so that's why I like go or don't, because they're simple. You go above the high, you put a stop underneath the low, and you just say go or don't.
So exactly, right? Easy peasy. You get 1 day of price, you get triggered and it has one good day. Pretty easy to move your stop to break even and get yourself in a, no lose situation, right? Yeah. Only good things can happen to me situation. The stock did come through on earnings at all-time highs. I think you could pretty easily target it to that recent swing high. I think I would have the secondary target a loose secondary target at 370. But you are, in full. If we confirm and if we are able to take out that earnings high, then you are literally the sky is the limit, right? Type of a deal. But I would look at 360 by 370.
You know what I really like about Frank's targeting, Bobby? He's always more conservative than I am. Like always, like on his T2 targets. And it always makes me kind of not doubt, but just kind of make sure that my targets are legitimate. You know what I mean?
Yeah,
I'm usually a little bit more aggressive on T2. Both of us are pretty consistent on T1. It's like any pullback scenario.
Like where's your first challenge, right? Unless you're pure flag into the 9, we're going to the swing high.
Are you thinking swing trade here?
Yeah, I'm thinking you're just looking at a little swing trade on this situation, see where momentum
strategy
can take you.
wise,
It's GD, so it's kind of it's very
you're not
doable
going
with
straight
options.
bond, you're not going straight equity.
Yeah, yeah. I mean, you can always pick. Well, you can go straight equity
You
these
can go
days for
straight
a
equity on
$0,
anything you want. Yeah,
just a
there's
small dollar
yeah.
baller. But I do, I'm like Bobby, and I don't know if he gave it to me or I gave it to him or we just figured it out together. I don't know. I'm never a call guy, right? So I do think you spread this thing out a little bit. If you want a traditional 25 net delta bull call spread, I think that's fine. I don't hate the idea of a 360 by 370. You're going to need more movement, but you're going to get paid pretty good if you are able to get that movement. So I think you could structure, your bull call to your preference. Like I wouldn't do a 400 by 410, but if
Yeah.
you wanted to start a little bit, at kind of
If you're going to go
T1.
out of the money, you do it at the pivot point. Like,
So exactly. So it's a way to still have really good upside. You do need more movement, but you do have good risk to reward in those type of scenarios. But yeah, I think you're probably just realistically either looking at what I call a small dollar baller, which is just a small stock trade, right? Nothing fancy. I can only buy two, right? But if I could buy 4 shares under the math we use and risk $30, right? So the cost would be a little bit more, but my risk would be $30, right? So we can do that, but I think the spread is maybe a little more efficient, all things being equal.
yeah, I would agree with that. Typically on these higher dollar stocks, I think it's much more efficient to use options. When you're talking about Ford and a $13 stock, that's a different conversation. It just is.
Just is.
Um,
Yep.
all right. Round 2 here, guys. We got GD and Ford. We got pullbacks both. Got to go or don't set up on GD. And from a strategic perspective, Frank's looking bull call spread, but certainly could be a low dollar baller. Not is it low dollar baller? Low dollar baller?
Small dollar. Small dollar.
Small dollar. Low dollar would be the Ford one. Gotcha. And then on the second one, guys, we have Ford. Yeah, it is.
Yeah,
It's
keep an
not.
eye on
It'll
it.
get smoothed out,
It'll
Omar.
smooth out, but yeah,
Yeah,
check it tomorrow morning
yeah,
versus like
it'll get
right now.
smoothed
Yeah,
out.
you're absolutely right there.
Yep. Yeah, I saw that one too, Frankie, and I saw it on the option chain as well. I just didn't want to like kind of have to overtly explain that one, but Omar caught it, and that's exactly right. The
Yep.
chain will get tighter as we do get into the market tomorrow. Bobby, do you still maintain your Ford trade, or you want to switch to GD?
I'm sticking with Ford. I like
Frankie?
this go or don't.
He's a Ford man. Growing up in Southern Utah, in the 80s and 90s, like you were Ford or you were Chevy, right?
There
People
was
had
not a third.
there was and you weren't both. You were a
Good
Ford
luck
man.
if you said Dodge
You just got laughed at, right? You just got
or
laughed
kicked
at in
out of
that
the
scenario.
county.
And if you pretended that you liked both, no one believed you. You lost all credibility.
Make a
Bobby's a
choice.
Ford
What's
man.
wrong with you?
Bobby is a Ford man through and through. But no, I'm going to stick with GD. I really like the general look of industrials as a whole. I think XLI is a playable situation. A lot
Especially
of the,
with that potential breakout
I mean,
on
that's a
high.
long
Like you never want to
consolidation.
count your chickens for their hatched here, but it does look like a pretty decent breakout that's brewing here.
Yeah,
Probably needs some help from the trade win side of the equation, but we get some positive news tonight out of the trade side. I'm looking forward to getting updated on all things trade here in a little bit. But yeah, that looks pretty tight on industrials. Personally, I like them both. I think you guys brought excellent picks here. I do prefer the Ford setup in general, just given the fact that I feel like you got a little bit more proper momentum here than you do on GD. But both of them are extremely similar on secondary patterns here. So I'll go Ford personally, but looks pretty good here.
there you go. Did we just
Yeah,
turn you into a 5 bouncer? Because he's always said no to 5 bouncers, Bobby.
no, you did.
It changed today.
I love the 9 EMA, but you don't get to pick your preferred destination in a retracement.
Nope, you do not.
You get to pick your breakout levels. You don't get to pick your retracement levels. You have to learn how to navigate the art of the pullback. And I do mean that, the art of the pullback. And if anybody here listening does not understand what I mean, I promise you, I have a class called Master Trader that you can come learn from. And it is amazing. So come join us at Tackle Trading and learn from us in Master Trader and apply with us every single day. Yes, I can take a look at the spider after the FOMC meeting today. Once again, did we have a Fed meeting? Oh yeah, we did. We did have a Fed meeting today. I kid, Gilbert. I kid. But post Fed, I was watching the intraday side of the equation the entire session following the Fed. And when you kind of come into the intraday side of the equation here, you can obviously see when we got into the press conference and you saw that, kind of that selling behavior here. Everything before that violation was pretty much neutral here. And the ultimate thing was, is the market going to pull back a little bit or form a high base here? And so is the market going to pull back to that 9 EMA and give us a little bit of a 9 bouncer, or are we going to form up a little bit of a high base here? And the reason I say pull back or high base is when you come over to the hourly chart here, you kind of had given up a little bit of the edge on the intraday side of the equation. And I was talking in the Traders Lounge earlier today, and I basically said, guys, once we gave up this trend, and it was even before the Fed, the market shifted a little bit coming into the Fed. And now, as you can see, post Fed, what's the market kind of struggling with now? The market is kind of struggling on the intraday. And I'm just talking intraday mechanics here. I'm not talking daily structures or weekly structures.
Yeah.
All of those are intact. All of those are perfectly fine. This is how you tactically navigate it from a technical perspective. And so, as you can see, you're underneath that 9 EMA on the hourly chart now. And as you're underneath that 9 EMA on the hourly chart, the market really struggles with trying to giddy up and get above those numbers. And so as you can see it right now, you're kind of starting a little bit of a pullback here as you've given up your edge after post FOMC. And, with the FOMC here today, obviously there wasn't a lot of major news. I mean, we were talking in general, we're talking about a doji on the daily time frame. So let's not make it more than it is, right? We're talking intraday, and sometimes when you look at the intraday, it looks really, really, really volatile when the reality is, guys, this is a doji. Like that's all it is. Little spinner up there. But you did see some shifts on the intraday here. I just wanted to explain that because sometimes when you look at this, you're like, oh my goodness, that's nasty volatility. I'm like, yeah, it's a doji. Let's not get too aggressive here. But as you can see, you're really kind of struggling with trying to get back up above. And some of that was due to Meta, honestly. Like if all things being relatively equal without Meta, I do think we're talking about a continuation breakout right now. Google was great. Microsoft was fine. ServiceNow was fine. Meta is really kind of the problem child right now. And you can't discount Meta going down that much in a short time frame. That's going to pull the index down a little bit.
Yep.
And so you can see kind of the market right here struggling against these overheads. And when I was looking at it earlier today during the session, I was kind of looking at it right here. You see these, Gilbert, you see these wicks right here? And I was kind of looking at it right here at 6,900. And I made a statement earlier today. I was talking to a bunch of day traders and I made a statement. I don't really have an opinion in this range. Like I don't have an opinion inside the range because what the market is doing is it's determining the range. The market's battling and it's determining that range. And I also made a statement that now that the market's underneath these shorter duration moving averages on the intraday chart, the cleanest path is a pullback at this point. And so 3,900 is kind of that level for the beginning point of the pullback analysis. You stay above 3,900, I kind of feel like you're in high base analysis. And so that's kind of where I'm at here is at this point in the saga, we got a good pattern developing on the daily time frame. I don't know if it's going to develop into a consistent high base with the 9 EMA catching up to it, or tomorrow if we're going to see a little bit of a pullback down to that 9 EMA. But ultimately, this is the patterns we're looking at developing right now. They're not longer term patterns. These are all extremely shorter term patterns of how you would tactically navigate the next few days. And so, slight overextension. We're seeing a little bit of shift on the intraday time frame that's creating some intraday noise a little bit to where I don't know for certain right this very second. Are we a high base here where you would just be simply looking at the breakout analysis, or are we going to pull back a little bit and kind of kiss off that 9 EMA? I'll have a much, much, much bigger opinion on that as we kind of come into the lounge tomorrow. I do want to see the cash open. I think that's going to be important following these reports. And also, I think by the time we talk about this on Friday in the newsletter, I also think we're going to be equally having a much better understanding of where these next trades are. Because if we're going to consolidate all week long in this week, I'm not going to see that as negative.
No.
If we kind of finish the week after the murderer's row of data and you haven't even given up the 9 EMA, I think we get into breakout analysis very aggressively, quite frankly. So I'm very keen on the 9 EMA here. Either does it catch up to the price action on the daily chart and give us a really clean high base breakout scenario, or are we going to start pulling back? The intraday following the Fed suggests a pullback, but we haven't even clipped the low points of that initial move following the Fed. The initial move on the Fed here is straight down. We're kind of inside all that right now. And so I still don't believe the market has really picked a direction yet on the intraday side of the equation. Still dealing with a lot of chop, and I just don't want to have a strong opinion when the market's in this range right here, and it's a lot of volatility, lots of levels, lots of volatility. And that's to be understood when you're talking about in a 3 hour time frame.
Yeah.
Fed, Meta, Google, Microsoft. That's a lot. And not only that, the big one of the big one is the Chinese US trade talks today, and I haven't even gotten into that one yet. And so there's a lot of data coming into the market. I kind of feel like as a swing trader navigating earnings season right now, we let this pattern play out a little bit. I do think the market in general has a pretty good understanding of where we're at in the earnings saga. It's very good right now. If you see a trade, you have confidence in that trade, I don't see why there would be any reason not to pull the trigger on that. But from a market perspective, I don't believe the market's providing a tailwind to your trade right now. I believe the market's in a little bit of net neutrality right now in terms of providing a tailwind or a headwind to your trade. And that's really what you're trying to understand with the market. Is the market helping you or is it hurting you? And right now, it's kind of doing nothing. It's kind of just sitting there basing. And again, don't get too caught up on the intraday noise here today. This is very normal on Fed day in general. Yet on top of that, all the other data, we're going to see some shift on volatility. Let's see this play out over the next 24 hours. If the pattern stays tight, 9 EMA is catching up to it, you're going to love that high base breakout.
Oh,
We
yeah.
start pulling back. There's a couple good pullback zones here to track, guys. 9 EMA is going to be a really good pullback zone. 6,800 is not a bad number here. Like you pull back in a little bit of a Cody special down to that 6,800 level and you pivot back up, that's a pretty good look too. And so tactically, if you're looking at a current trade like you are on Schlumberger or GD or Halliburton, or which would have been my pick if I would have given it to you there, Omar. But if you're looking at those, you certainly want to see the base hold here, and you certainly want to see the breakout. You want to see the market recover on the overnight, get into that breakout, and stay structured in a high base. Because if you start pulling back, pullbacks can get a little dirty in the short term. Remember, breakouts are analytical, scientific. Hit a number, achieve the number, you're good. Retracements are a little bit of art. So all things being relatively equal, I do think the bulls are hoping for a little bit of cleanup following the Fed, get back into that high base, or not get back in, you're kind of still there, but maintain that high base, and then 9 EMA catches up. I think this could be a really good look going into the
It
weekend.
absolutely would be.
Absolutely, for sure.
It's not bad, but I do think it needs to get cleaned up a little bit. So good question on that on the FOMC. Thank you for allowing me an opportunity to discuss it a little bit there. With that said,
It was fun.
that's it for today.
It was a lot of fun.
Let's go final thoughts here. Bobby, you first.
Excited to see what the price action is with those those couple earnings, and to see what we got going on tomorrow, post Fed, and making sure that planning the trade and trading the plan.
Love it there, Bobby. Coach Frank, final thoughts.
So yeah, back half of the week still pretty busy. We get more mellow after that. So as I always say, stay on top of your earnings date so how to manage or when you need to get out. I think you said it best, Maddie. See a trade, take a trade, but until we kind of get that next push on the market, it's not hurting you, it's not helping you type situation. So
yeah.
I will get my scan over in Discord as soon as we're done here, so I don't forget to do it.
Thank you.
But as always, thank you for joining us. Always fun talking shop with you gentlemen and with the team. So everybody have a wonderful night. We'll see you tomorrow if your team tackling the lounge. And if you're not, never a better day than today. Hit that free trial. Come hang out with us in the lounge tomorrow. Hang out with the best community 100%. Out there.
And if you never want to miss a trade on gold miners or gold, tackle trading is the greatest community in the history of mankind, because we are breaking this we're breaking this pullback down on every time frame, every single day, because we are not missing this pivot here.
Nope.
We love the current development, but it's got to come to a proper conclusion. Intraday story is getting a little bit more consistent here. Love the pullback on gold.
We'll be doing some gold shopping tomorrow or Monday in the lounge, I suspect.
No about that. Team, if you love tackle trading, you love Trade Masters, give us a nice little like and share on the way out the door. And if you're watching on the replay, let us know your favorite picks in the comments section as well. And with that said, everybody have a wonderful, wonderful rest of your day. And I do believe we're going to be doing a podcast on Friday on our YouTube channel, waiting to hear on the final schedule from Coach Mark. So we haven't done a podcast this week. We are hoping to do it on Friday. It's been a little bit of a busy week, so apologize for that, but we are hoping to get that podcast out, the Trading Justice podcast, that is, on our YouTube channel on Friday. With that said, team, have a wonderful, wonderful rest of your day. If you need anything from us, hit us up at Team and Tackle Trading. And if you're not a pro, hit the link in the description below, sign up for a free trial, and you'll never regret it.